Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone had a great weekend and did something trading related for a bit. Great to see you all yesterday for our weekly show, 6 p.m. Sunday. If you did not know, we do that every Sunday to kick off the week right here at the Simpler Trading YouTube channel. You can check out the replay back at the channel. Always great conversations as we are starting off the week. All right, so speaking of the week, what do we have going on here? We touched on this a bit yesterday during the show, and that is for the next 2 days, we have a pretty quiet calendar by way of scheduled high impact, high volatility events. So low on the hot zones until we get into Wednesday, and that is where the week really starts to ramp up in terms of reaction to data. So that's what we've got coming up on Wednesday, kicking it off with CPI. Remember, gang, anything that's going to map to jobs, inflation, consumer behavior, growth. In fact, the last two ISM numbers were actually very, very actually, I was expecting jolts to move the market more last week than it did. Both the ISM manufacturing and ISM services triggered far more dramatic price action than we would normally see. Keep that in the back of your mind as we get this accumulation of data, as the market is trying to determine really one thing: is the economy in a recession or not? Gang, it really doesn't matter. That's just such a conversation only happening in sort of the echo chamber of television, right? They love that conversation. Anything that has a nice candy-coated fear element, they're going to love. The conversation right now is, does data allow the Federal Reserve to move towards what we could consider the upper end of what is expected in terms of rate hikes? That would actually be the 3.75% to 4% target rate probability by December, down towards the lower end, 3 to 3.25%. And you can see all four columns represented here. Or are they going to land at the 3.5 to 3.75% target rate probability? That's the percentage that they're going for. Are they going to land there, which has been the expectation for most of this year? There's been a brief amount of time where 3.25 to 3.5 was the tallest column on this graph, but it's gone back to where we have been. Anytime we edge towards the higher end of this expectation, it's because we have quote unquote good news: solid jobs, stable growth, higher inflation. Now, higher inflation is kind of the wild card because that's going to keep them pressing the accelerator on rate hikes. But as long as jobs and growth, and you might say, growth, Rog, we're in a recession, are we? It means less than it's ever meant. So don't even worry about recession. Nobody I know, other than on television, and I don't actually know anybody on television, or frankly care what they say on television, nobody is changing the way they're trading or they're investing because of a recession. Okay, nobody. There are recessions, generally speaking, by the way, gang, and I get punchy, right? I turn into salty Raghee. I turn into salty Raghee when it comes to this topic, because the fact of the matter is, it's just not a useful conversation. It just isn't at all. It takes 2 quarters to know if we're there, if it's not been redefined. And usually by a quarter or two, we're already coming out of it. So by the time we know we're there, we're actually leaving. So that's why I say, don't worry about it. This is what you need to know. This is where all macroeconomic and just all these hot zones are going to map to. This is how you can measure it with consistency, right? With consistency. With that being said, let's go ahead and start jumping into the questions. As always, that is what this show is all about. And let's see, kicking it off with, all right, Tim has a question about, if I have more than 5 yellow and green prop dots with a daily double green, multi-trend over 200 and not too overbought. Remember, Tim, overbought, oversold is not a conversation that we have in trends, right? You're describing a fairly robust, well-organized trend. So overbought, oversold does not work its way into a trending conversation. Remember, overbought and oversold is inherently an imbalance. Imbalance is where we have overbought and oversold, right? Which entry would we consider? Oh, any of those. I don't like the, so UNH is the question. Sure. I do not like the 13 as a general rule. So I'll usually turn that one off. 13 exponentials are usually not going to get me in. If a market's parabolic, I'll consider the 8. Otherwise, I like the 21 propulsion, the 21 exponential propulsion, and the 34 exponential wave. And that's usually where my look, we know there's something called a reversion or a regression to the mean, right? We know that's sort of the lingo of pullbacks in an uptrend or bounces in a downtrend. So when we have that possibility, it's got to be in a trend. And everyone's going to have what a different mean is. Remember, there's no broadly accepted version of what the mean is, right? The mean is not something that we've defined as a certain number. For some folks, the mean might be a Fibonacci retracement of the last major move. For others, it might be a move to the wave. For others, it might be a 50%. I don't know, right? There's so many different versions of what that actually could ultimately be. So what we want to remember is we have to determine for ourselves what's a trend and then what's that pullback or that reversion to the mean. In this case, yeah, I like the 21. I'd focus on the 21 there. To your question, Tim, the wave is fine. The wave is my preference. But if the 21 propulsion has at least 5 dots, works for me. Absolutely. Let's see. Next up is, how does Bitcoin look? I don't know. I haven't looked at it in a minute. Not something I look at very often, to be quite frank. Oh, I'm going to sneeze. Ooh, I love the mute button. Okay. All right. Let's get that sneeze out of the way. Bitcoin. So if we look at Bitcoin versus US dollar, I mean, it doesn't matter the feed. This is Bitcoin versus US. And the question is, how does it look to me? Looks like chop. Looks like chop. That's really it. That's the daily time frame there, right here. Looks like chop. On the weekly. Weekly looks like a downtrend, but the daily looks like chop. So that's it. Overbought, oversold. It's really funny. When Bitcoin was at 60,000 last year, 50,000 earlier this year, 68,000. And I like that you're asking a question, Nick, down here. I love that you're asking a question at 24,000, not 44 and 54 and 64,000. This is where we should be asking, is this somewhere that it makes sense to consider buying Bitcoin or whatever cryptocurrency that you're interested in? I can't say there's a setup here, but it does seem to be that the previous downtrend has now been broken and it's moving in chop. That's what we see. And then what we see is going to ultimately map to eventually what, if anything, we do. So I view it as chop. It's a choppy market. Next up is Debbie asks, if I were to intraday options, trade intraday options later in the day, but I know you do not, but hypothetically, would I go further out in expiration, or is 0 days to expiration still valid? I don't mind to trade the PM session. I love the AM session. In fact, I like the first hour of the AM session. The PM session, I've got to have something very compelling to get me to trade the afternoon as a day trader. But if we're going to talk about intraday or day trading options, and that is an activity for me that is on the 5-minute time frame, I still want to be flat by 3:50 p.m. Eastern. Now the question is, could we go further out? I think if you are, I don't do this, but if you are Debbie or whomever's listening, to this and thinking, well, I day trade a 15 or 30 or 60-minute time frame, Rock. I don't do that. However, that would map to being able to possibly take that market structure and that setup into the next trading session. But that's no longer intraday or day trading, right? Because intraday or day trading only means one thing. There's only one thing that overlaps across all day trading behavior, and that is I'm flat by the end of the day. How we enter, why we enter, what environment we enter, what tools we enter, the actual strategy varies widely. So there's no one day trading strategy. In fact, really what it's about is this desire to only be in for that session. So no, I won't. The only reason I ever go further out in the expiry, Debbie, is because I can't find tradable sufficient liquidity in the closer expiration. Could it be zero? Well, remember, we don't always have access to a 0 days expiration and everything that we would day trade, but as close to expiration as possible with liquidity. Yeah. All right. PD asked, did I miss anything about what's going to happen with TradeStation stops the App Store? I have no idea, PD. Yeah, not a clue. We have slowly been focusing on Thinkorswim and TradingView only. That going forward, and it's been this way for about 2 years now, I've focused on those two platforms. Now, if you're a TradeStation user, if you notice, I don't know if you can see this at the bottom of my screen. I've got my TradeStation. You can see that right there. I've got my TradeStation data feed plugged into TradingView. I have no idea though. But I will say this is what I do know. As far as any indicators going forward, two platforms, and it's only two platforms that I really support and write indicators for, and that's going to be TOS, which covers really the widest group of traders in our simpler community. I'd say probably 90% of our community, thousands and thousands of traders are on TOS. And TradingView, I hope a lot of traders are looking at TradingView because it's broker agnostic. It's very web friendly. It's phone friendly. I really like the platform, and that's the other platform that I'll personally be supporting with my indicators going forward. So yeah, I don't know. PD, I have no clue. What's going on with that. Let's see. Next up is any thoughts on ICLN? Sure. Kind of sticking with the TradingView charts here this morning. By the way, I'm on TradingView right now. Any thoughts on it? It's double green, right? So it's always trade what we see, not what we think. The double green in large part was propelled by that sizable gap up. It's not as if we traded step by step, rung by rung on the ladder to get here. So it's a little suspect. It is a little suspect. We are at a level that arguably almost 3 times, late 21, April 22, and then now that we've exhausted at. So I'd be very cautious. Yes, the 8, 13, 21, 34 organized into an uptrend, but the way we got here, since half the move benefited from that gap, it isn't exactly like we earned it session after session, climbing up that mountain. So I'm always suspect of markets that turned into uptrends in large part due to a gap up. So I don't really love it. I think there's every bit the chance that this market truly is overbought and might stay in a range. So maybe if within the clean energy index fund, you crack that open, look at the holdings, are there individual stocks that have better structure, kind of earn their way up here over the ICLN itself? All right. Okay, next up is what do I think about the SPX? So I don't personally trade the SPX. I trade the SPY, and I prefer the ES futures. But here's a cool thing. They all are the same thing. They're all the same thing. S&P futures are going to be a better view of what's happening in the S&P than the SPY or SPX. Not better because the others are bad, but better because it's more complete. Remember, futures trade more liquid and longer than SPY and SPX. So I'm going to get a much more complete view. Those aren't wrong views, they're just incomplete views. However, because we have this more complete view in the S&P futures, we can use what's happening here to trade however we want to trade the S&P. Could be the micro, could be options on the futures. It could be the S&P, options on the S&P, SPX, right? It's going to map to sort of choose your own adventure. The S&P is overbought. That's the bottom line for me. It's overbought, sitting at Darvis resistance, sitting at the 200 propulsion resistance. It's not as if we cannot go higher. Of course we can. But if I let structure dictate strategy and I look at what's happening right now, I can do nothing, or I can look for a short right now on the daily. My preference has been in this time where, yes, I do believe minds are slowly changing as to, and I've been talking about this for an entire month now, that yes, the end of the downtrend, right? The end of it, which is not the same as saying it's time to buy, right? It just means that the end of the downtrend. Stick a fork in it. That happened back July 7 when I sent that video out, and I explained why. If you have not checked out that video and you want a process-driven macroeconomic view of why the downtrend was broken, please check that out. That's the only way we can make assessments like this. Not anecdotal observations, not because some secret squiggle is doing this or that. You'll see how you want to get in the habit of this is what's worked for me, gang, right? This is what's worked to keep a level head, not get swayed by whatever nonsense is on television, not to get swayed by every headline, not to be distracted by geopolitics. We've had plenty of that, and just focus on what's moving the market. And you'll see how often it really is that boring stuff, that rate of change macro that moves it. Anyway, while we're in this sort of state of flux, I day trade. In fact, I'm going to be doing that in about 3 minutes here when I move over to the Sector Secrets Mastery. And we start day trading like we do Monday through Friday from 9:20 to 10:35. So that's the plan until I get a really clear view or a really nice setup on the S&P, ES futures. I'll just keep day trading. I'll just shorten the time frame, and that frees me up to understand what's going on in terms of being able to wait, being able to get a setup that I like, and not needing day after day, session after session of follow through. That's what's been hurting, I think, most of us in the longer term time frames, right? That lack of follow through, which is really where we have been. Let's see. Next up is thoughts on AMC and CCL for buying. All right, just grabbing some of the symbols here as we wind down the show. No, I don't play meme stocks, my friend. Yeah, I don't play meme stocks. I think there's a lot more rational action in more liquid names. It's just not my bag. And I usually don't like stocks under 20 bucks. I know. Vaneem, I appreciate the question very much. I don't like meme stocks like AMC, and I typically don't like stocks under $20. But I will say this. Both have one thing in common. Watch the volume. Right? Once you're under 20 bucks, and if you're playing a meme stock, got to watch the volume. That's going to probably be more important than any indicator. How much price-based volume is sitting at different levels. And that's going to give you a lot of clarity on these. All right. So next up is, do I wait for confirmation of a move before entry or buy into a play more aggressively and average down? Well, if I'm not waiting for confirmation, it's really not a trade, is it? So I believe that every setup has a price level that we're interested in, and maybe reaching that price level is a confirmation, maybe reaching that price level and an indicator confirming that it is overbought or oversold or a correction or a trend, pullback, that kind of thing. Maybe that's the confirmation. I think the question you're asking is, do I wait for price to sort of agree with the direction I'm expecting the market to move? No, I do not. And as far as aggressively, well, I think in every zone that I teach traders in the sector sequence mastery to focus on. We have an aggressive zone, which has a certain amount of our budget, certain amount of position size that is synced up with that. Moderate and conservative. And each one of those has a different position size associated with it. I do not believe in averaging down, because usually averaging down has a connotation of, well, I'm losing here, let's just randomly buy again. I know that's not what you're asking, but that's oftentimes the behavior that ends up being averaging or adding to a loser, which is what I hear. Either I have all those levels predetermined or I don't. And if I don't have those levels predetermined, I will not continue to build the position, because that's what I wanted to do, right? If price got to, whatever those three levels are for me, or a zone. Unless it gets there, there's nothing to do. And then while it's in there and the conditions remain valid for a buy, there's something to do. But I don't even like the word average down, although I know that's not what you mean. But I don't even like the word average down, because it doesn't presuppose, it doesn't emphasize it. The subsequent entries after an initial entry, really should have been predetermined. So we either reach those levels or we don't. Love the question. I think that's very popular jargon, and no one really, but we seldom see diving into, what does that mean, Rag? Is it just, I can add now, or was it a pre-planned? It's always got to be predetermined. If we don't see the trade coming, it's just a gamble, right? It's just gambling. So that's the way that I look at it. As always, gang, thank you so much for all the questions. Thank you for joining me for Charts and Coffee. Time to go caffeinate and dominate. All right, gang, be good to each other. I'll see you tomorrow.